Assalamualaikum, my name is SHAMIMI binti RANI. My matrix number UDE 200098. So the overall objective of IFSB-5 is to set forth guidance on key elements in the supervisory review process for authority supervising institutions that offering only Islamic financial services. In this context, the supervisory review process covers capital adequacy, risk management, internal controls, and corporate governance. This document takes a risk-based on approach to the process of supervisory review. The images of institutions that provide a wide range of Islamic financial services have resulted in some supervisory authorities prescribing additional requirements in order to address elements that are specific to Islamic finance, including risk characteristics and issues relating to Sharia compliance. The requirements include guidelines or framework related to fit and proper requirements for Sharia scholars, rate of return calculation methodology, and the scope of Sharia audits. This IFSB-5 is intended to foster convergence toward best practice among authorities supervising IIFS and enabling such supervisory authorities to meet their requirement when carry out the rules expected of them in the light of IFSB standard. And this convergence should lead to the establishment of a common approach to the minimum review process to be followed by authorities supervising IIFS. This IFSB-5 aims to encourage the authority supervising IIFS to include measure qualitative and quantitative relating to elements in this IFSB in their regulatory policy or supervisory review program. That's all. Thank you.
Assalamualaikum, my name is HANIE binti AIDI. My matrix number UDE 200130. So I will present the direction of this standard. So basically, the standard will provide a guidance on the key element in the supervisory review process for authorized supervising that offer only Islamic financial service. First of all, the necessary condition for effective supervisory. In this case, supervisory authority needs to recognize the requirement for a framework that both consistent with the Islamic precepts. I'll get some of element condition needs to apply for IIFS. First, provide a mechanism for fair dispute resolution for the business law. Second, provide an appropriate level of systemic protection. And in terms of independent audit, the auditor ensure that the financial statement have independent assurance and so on. Also, supervisory authority must provide a framework for Sharia compliance mechanism for IIFS, and regulatory has a role in referencing market discipline by requiring timely and relevant information disclosures. We move to regulatory capital requirement. In this case, supervisory authority recognize the need to ensure that their regulated entities meet the applicable minimum capital adequacy requirement. Moreover, supervisory authority also should require each IIFS demonstrate its capital is commensurate with the level of its overall risk exposure, such as asset or real estate, whether these activities are carried out by IIFS itself or through subsidiary. Subsidiary authority may provide specific guidance for slotting method for Mudharabah or Musyarakah contract. In terms of treatment, IAH, the supervisory authority may charge full exclusion of the credit and market risk from asset found by IAH may not be appropriate. Plus, supervisory authority will assess or evaluate the reliability and accuracy of method for the purpose of computing the capital adequacy requirement. Risk management and corporate governance. Supervisory authority should set a significant emphasis on the adequacy risk management of IIFS. In terms of risk management processes, supervisory authority should evaluate the profile of IIFS under different risk categories and assess the appropriateness and the quality of their risk management system. And also, because of restricted investment accounting are not carried out through separate legal system, supervisory authority must require IFS to have adequate internal control, risk management, and risk disclosures to IAH. While in governance corporate, supervisory authority should review the control and quality of internal governance of IFS. This is to ensure the control environment is consistent, commensurate with the size and the nature of the business. Last but not least, in terms of audit compliance, in this case, supervisory authority should hold a discussion with the compliance function of IFS, with internal and external auditor and the audit committee in order to assess the adequacy of the control and the compliance function and scope of audit and so on. So I think that's all for me. Thank you so much.
Hello, my name is NURUL and Syazliana binti ZAINUDDIN. My matrix number is UDE 200111. I would like to explain about my part, which is direction of the standard. The supervisory authority must be satisfied that the IIFS related party transactions are performed independently. When the transaction in question involves the transfer of resources, service, or liabilities, the concept of related party transaction is identical to that stated in International Accounting Standards 16.2. A related party is defined as a member of board, institution, board of director, or senior management, a Sharia advisor, and external auditor, major shareholders, or other related interests with whom the institution has business transaction that may benefit that party rather than the institution shareholder and IAH. Sharia advisors must be members of the Sharia Supervisory Board, which has the authority to approve or disapprove products and operations in order to be included in the above definition of linked party. The authority must assess how disclosure reinforces for disciplines and fiduciary duties to various stakeholders, including the IAH, in relation to IIFS conformity with Sharia rules and principles, among other things. Insofar as the IAH faces its own risks, it is critical that IIFS financial reporting includes information regarding its investment performance in an easily understandable style. In addition, the supervisory authorities may work with the IIFS, industry and consumer groups to advocate for and promote best practice in risk management and controls. Insofar as the IAH face their own risks, the supervisory authority should be satisfied with the adequate and timely disclosure of risk and written information, as well as the receipt of IIFS reports, which, among the other things, provide early warning when necessary. Differentiating the scope and type of information to be disclosed by a different type of users, such as regulators, existing and potential shareholders, and other parties working with the IIFS is critical. General framework of arrangement relating to supervisory authorities' ability to communicate information is seen as consistent with worldwide best practice, which emphasize procedure for improved information sharing and coordination to strengthen the prudential supervision and crisis management. This framework may contain, among other things, uniformity in the application of various confidentiality rules, reciprocal undertaking with respect of information sharing, the appropriate connection and competent personnel, and assistance with the language and terminology. Supervisory authorities are expected to consider implications relating to competing pressure within the financial sector on country-based interests, national Sharia interpretation, legal and tax system, crisis management, and the benefit of international cooperation in the context of home-host relationship. Because deposit insurance schemes are not available in every country, particularly Sharia compliant schemes, Supervisory authorities must examine whether IIFS can engage in the hazardous operation based on whether IAH is completely or partially injured. The supervisory authority must conduct a comprehensive risk assessment, close coordination with other supervisory bodies in critical nations where these activities are monitored by a distinct regulatory organization. Frequent conversation or memorandum of understanding may be required to define explicitly their various tasks and responsibilities, as well as to establish a central point of contact to facilitate coordination between the authorities. This single point of contact is critical to achieving the goal of risk-based supervision. The central point of contact should be familiar with the IFS activity, keep up to the date, and exchange IFS specific information with any relevant supervisory authority as required. The body monitoring the parent's IFS may determine whether risks are transferred from regulated to unregulated firms or vice versa for unregulated and/or non-financial subsidiaries of regulated IIFS. Regardless of the strategy, it is the primary responsibility of the host supervisory authority to guarantee that the IIFS under its supervision follow all national norms and regulations, including Sharia regulation. The home supervisory body is anticipated to require and have access to a variety of information relevant to the foreign branch and subsidiaries of an IFFS group under its supervision for consolidated monitoring. The home supervisory body should gather information from IIFS group under its supervision about the objective, business operation and risk management methods applicable to their international branch and subsidiaries, as well as other supervisory concerns to help with the assessment process. While the level of cooperation and information sharing is important for IIFS group operation, the cooperation structure was chosen, such as Supervisory College 20 bilateral and multilateral, should reflect both the group structure and the supervisory needs. That's all for me. Thank you.
Hello, hi, Assalamualaikum warahmatullahi wabarakatuh. My name is NURFARAH NAJIHAH binti NASRI and I am from UDE IZZATI section 2. My matric number is UDE 2000106. Based on Islamic window operation for the purpose of this standard, an Islamic window operation is defined as part of a conventional financial institution, which may be a branch that provides both fund management, which is investment account, and financing, and also investment that are Sharia compliant. These windows are potentially self-contained in terms of Sharia compliant financial intermediation, as the funds managed will be invested in Sharia compliant assets. The term window is used in some jurisdictions to refer to an operation whereby an institution invests funds in Sharia compliant assets without such funds being mobilized specifically for Sharia compliant investment purposes. Supervisory authorities should be guided by the IFSB standards on risk management and capital adequacy in supervising such operations. The institution should have a system such as the separation of Islamic assets with funds from non-Sharia compliant assets, and that fund is made transparent. As such, windows need to be differentiated from Sharia-compliant mutual funds that are separate legal entities and providers of Sharia-compliant financing products, for example, for house purchase, which do not mobilize funds with the assurance that they will be invested in Sharia-compliant assets. The supervisory authorities in these jurisdictions need to certify themselves that the institution offering such windows have the internal system, procedures, and control to provide reasonable assurance that the transaction and dealings of the windows are in compliance with Sharia rules and principles, and appropriate risk management policies and practices are followed. In supervising a window operation, the supervisory authority needs to bear in mind the specific characteristics of the Sharia compliant as well as the fact that it is part of a conventional institution. This is true of capital adequacy, corporate governance, risk management, and disclosure. A window operation should in the first instance be considered separately as a branch of the entity of which it is a part. The latter will then be considered on a consolidated basis. While based in internal control, the window is expected to provide evidence and assurance that the products and operations comply with Sharia rules and principles by appointed from competent Sharia scholar or Sharia board of such scholars. The scholars should be independent and free to give their opinion on the proposed contracts and transactions. The scholar may provide continuous supervision of Sharia compliance in the contracts, transactions, and procedures. In case where the institution does not appoint a Sharia scholar or board, the supervisory authority needs to seek explanation of the reason for not doing so. In addition, the supervisory authority should certify itself that pertinent Sharia fatwa and resolution are complied with by the financial institution management in implementing the Islamic financial service that the financial institution offers.
Hi, my name is ADILLA IZZATI binti Mustaffa. My matrix number is UDE 200072. I want to present about how to guide Islamic financial towards Sharia for the regulatory capital requirement. When assessing the capital adequacy of relevant traditional financial institution, regulator must take into account the Sharia compliant asset of the window and the risk tolerance of Sharia compliant fund investing in this asset. The IFSB capital adequacy standard provide a measure that can be used for this purpose. Although overall regulatory capital requirements are often reflected in regulatory requirement at the main agency level. In some jurisdictions, the amount of company on regulatory capital required to provide capital adequacy for window operation is clearly identified and separate from the regulatory capital available for regular operation. Using this approach for window operation requires consideration of significance. So for the Islamic defined in paragraph 56 in IFSB-5, defined as a part of a traditional financial institution that provides money management and Sharia compliant financing and investment. In principle, this window may be independent of Sharia compliant financial intermediation as managed fund invested in Sharia compliant asset. For the application is capital requirement can be calculated by first calculating the amount of the CAR denominator and then calculating the amount of capital required to meet the regulatory capital requirement in the CAR numerator. This amount can then be deducted from the bank eligible capital in the CAR numerator. However, regulators are free to take different approach with same economic impact. Thank you.
I am THIERRY in the UDE 200128. I'm here to talk about the conclusion. And so that further on in the first conclusion is Islamic window. Islamic window is a part of conventional financial institution which may be a branch or dedicated unit institution that provides both fund management, investment accounts, and investment that are started and compliant. And secondly, we are in Arabian language, we are called a mudrabah. A mudrabah is a contract between a capital provider and a skilled entrepreneur, where the capital provider will contribute capital to an enterprise or activity to be managed by the entrepreneur as the mudarib or a labor provider. So profits generated by the enterprise or activity shared accordance with the terms the mudarabah agreement. While losers are to be home slowly by the capital provider unless the losses are due to mudarati's misconduct, negations, or branch or contracted in terms. And lastly is musharaka. It's in Arabic form also. So a musharaka is a contract between the IFS and a customer to contribute a capital to an enterprise, whether existing or a new, or to ownership of a real estate of a movable asset, either on a temporary or a permanent basis. Profits generated by the enterprises or a real estate or an asset, or shared in accordance with the terms of musharaka agreement, while losses are shared in proportion to each partners by sharing of a capital. Thank you.